Hey, it's Clay, and this will be a video chart on ticker symbol IZEA. We will take a look at the 30-minute time frame. Real quick, what do I mean by 30-minute in case maybe you're new to charts? Instead of each one of these candlesticks here representing 1 day's worth of price action, which is what you would normally see, each one represents 30 minutes. So all this here may look like several days worth of time. It's actually today's price action broken down into 30-minute time slices. I like to this time frame that does a good job of telling the quote-unquote story of the price, and then makes mapping out where levels of support and resistance a bit easier to see. Quite the eventful day today, not only from the price action perspective, but you look down here at the volume, and well above average volume on the day. And, as far as summarizing it, this was a gap and trap, and then the question going forward is this gap and trap going to turn into a pump and dump? So let's just first start off with, the gap and trap. Maybe you're not familiar with that terminology. So on Wednesday, the price closed right there. This morning on Thursday, price opened there, and then the price moved and moved and moved. I mean, it made a great move. There's no doubt about that. Some poor souls bought right there. And then from there is where the trap came in. Down it went. Just a gap and trap, a nasty, nasty move when all was said and done. But like I said, now the question becomes, is this going to be a gap and trap that turns into a pump and dump? Pump and dump meaning basically a price makes an awesome move, which is already done, and then within a relatively short amount of time goes right back to where it started. Right, so that's what a pump and dump from a price action perspective. I'm not saying the company is like being run out of a Somalian bunker. I'm just saying based on a price action perspective. So in order to kind of help us answer that question, it's all about this level right here at 44 cents. Why is 44 so important? Well, let's say that, and I'm not saying this is what's going to be the case, just explaining why it's very important. But if the price were to come down to 44, break through it, and then just continue on down, at that point in time, what would you have? You would literally have the price right back inside of this range that it just broke out of. And again, going back, not a sign of true strength. And as far as a pump and dump is concerned, that would literally apply that the price made a great move, and then within the time span of just a few days has gone right back to where it was. But on the flip side, and to be fair, perhaps something like this happens, and this only matters to people that care about the broader sense, or the broader picture. But if the price does come down here, bounce around, and then start to work its way back upwards, well, hey, at that point in time, you would have a set of lows right there. You'd have lows right there. You'd have a low down there. And if you envision those as stair steps, well, hey, from the big picture, the broad sense, you now have stair steps progressing in the upward direction. Now, granted, if you're a day trader and you bought right there, you don't care about these stair steps. But that, like I said, though that comment is definitely being geared towards those that have a broader time frame of things. So it's already been a gap and trap, not just a question of is this gap and trap turning into a pump and dump, or is the price going to be able to chip away and build a higher base? We'll see what happens. First off, thanks so much for watching the entire video. Real quick, before you go, I want to invite you to a live webinar, web class, training, workshop, online event, whatever you want to call it, but it will be me live revealing to you what I've discovered that has allowed me to transform myself from being an employee to being my own boss, including how I had only one losing day out of 73 days in total. I'm going to cover 3 keys that have helped me unlock profitable consistency within the markets. The first key is super weird, but in a productive type of way. The second key is super awesome because it quite literally is wired into our DNA as humans, making it very easy to use. But in a cruel way, this becomes a pitfall for many traders. I'll explain it all though, including how to avoid the pitfall that it creates for some. And yeah, the third key, when you hear it, sounds way too good to be true, but it's not, and I'll show you how it all works. Then at the end, I open it up for a question and answer session that is, again, totally live. Even if you can't make the live session, please still sign up as it will be recorded, and you can go back and watch the replay that I will send you. Click the image on the screen or click the link down in the description box so you can get the date and time and claim your spot, which I should note is limited due to the fact that this truly is a live event. If you have any questions, let me know. If not, I'll be seeing you soon.